Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that affects everyone's wallet, job security, and the future of the global economy, the US-China trade war. But we're not just rehashing old news. We're fast-forwarding to 2026 to see what the landscape really looks like. What's changed? Who's winning? And what does it all mean for you? Let's get into it. To understand where we are in 2026, we need a quick look back. The trade war officially kicked off years ago, with both Washington and Beijing slapping tariffs on hundreds of billions of dollars worth of goods. The initial goal for the US was to tackle what it saw as unfair trade practices and intellectual property theft. For China, it was about protecting its economic sovereignty and its path to becoming a global tech leader. Fast forward through years of negotiations, new administrations, and a global pandemic, and the situation has become far more complex than just tariffs. So, here we are in 2026. Have the tariffs gone away? The short answer is no, not entirely. While some have been rolled back or adjusted, many of the core tariffs remain in place. They've become a new normal, a baseline for the economic relationship. Both sides have learned to live with them, and industries have adapted. But the real story isn't about the old tariffs. It's about the new battlegrounds that have opened up. The focus has decisively shifted from a simple trade deficit to a full-blown strategic competition centered on technology and global influence. The biggest headline in 2026 is the Tech Cold War. This isn't just about one or two companies anymore. We're talking about a fundamental split in the global technology ecosystem. Think of it like two separate internets, two separate sets of standards for everything from artificial intelligence and quantum computing to electric vehicles and biotechnology. The US and its allies have tightened controls on exporting advanced semiconductors and the machinery to make them. The goal is to slow down China's technological progress in critical areas. In response, China has gone all in on a national mission for they are pouring unprecedented amounts of money into their domestic tech industry. We're talking hundreds of billions of dollars. The goal is to create a fortress China for technology, one that isn't dependent on foreign components or software. By 2026, we are seeing the fruits of this effort. China has made significant strides in designing its own chips, developing its own operating systems, and building out its own tech supply chains. They aren't at parity with the US across the board yet, but the gap is closing faster than many analysts predicted. This has created a fierce race, with both nations paranoid about falling behind. Now, let's talk about supply chains. The pandemic was a massive wake-up call, and the trade war accelerated the changes. Companies have spent the last few years de-risking their supply chains. This doesn't necessarily mean a mass exodus from China. China's manufacturing ecosystem is incredibly efficient and hard to replicate. Instead, we see a China plus one or China plus many strategy. Companies are keeping a significant presence in China, but are also building up new factories and partnerships in other countries, like Vietnam, Mexico, India, and Indonesia. This has created a new world map of manufacturing. Mexico, for example, has become a huge beneficiary due to its proximity to the US market. The nearshoring trend is real. This has led to a manufacturing renaissance in North America, but it also means higher costs for some goods. The days of relying on a single, super efficient global factory are over. For consumers, this means some prices have stabilized, but the era of ever cheaper goods is likely behind us. The trade-off is more resilient supply chains that are less likely to break during the next global crisis. What about other countries? They're caught in the middle. The world is increasingly being asked to choose sides. Do you use American-led tech infrastructure or Chinese-led alternatives? This pressure is most intense in developing nations across Asia, Africa, and Latin America. China's Belt and Road Initiative has evolved. It's now less about just building bridges and ports, and more about exporting its digital infrastructure, like 5G networks and surveillance technology. The US and its partners, like the G7, have responded with their own investment initiatives, offering an alternative vision for development. This creates a global competition for influence, with countries weighing the benefits and risks of aligning with either superpower. So, who's actually winning in 2026? It's not a simple question with a simple answer. It depends on how you define winning. If the goal was to cripple China's economy, that hasn't happened. China's economy has continued to grow, though at a slower pace than its boom years. The focus on domestic consumption and tech self-reliance has provided a buffer. On the other hand, if the goal was to force a rethinking of global supply chains and highlight the risks of over-reliance on China, then you could argue the US has had some success. The conversation has fundamentally changed. American consumers have felt the impact through inflation on certain goods, but the feared economic catastrophe never materialized. The US economy has proven remarkably resilient. However, some American industries, particularly agriculture, have paid a heavy price, losing access to the vast Chinese market. The real winner, if you can call it that, might be the group of countries that have picked up the manufacturing slack. They've seen a surge in foreign investment and job creation. Perhaps the biggest change by 2026 is the mindset. The idea of a full economic decoupling has been replaced by a more nuanced reality of managed competition. Both the US and China recognize they are still deeply intertwined. A complete split would be catastrophic for both and for the global economy. So, while they compete fiercely in strategic sectors like tech and defense, they are also finding ways to cooperate in areas of mutual interests like climate change and global health. The lines of communication that were almost severed have been cautiously re-established. They're talking, even if they're disagreeing. What does this all mean for you watching this in 2026? First, the technology you use might be different depending on where you are in the world. We could see different app stores, different social media platforms, and different hardware standards dominating different regions. Second, be prepared for continued price volatility for certain goods as supply chains continue to shift and realign. Third, the job market has changed. There are new opportunities in domestic manufacturing, logistics, and technology in the US and allied nations as companies bring production closer to home. But there is also immense demand for people who can navigate this complex new global landscape. Looking ahead, the US-China rivalry will remain the defining geopolitical story of our time. It's not a conflict that will be resolved with a single treaty. It's a long-term strategic marathon. The key questions for the coming years will be: can China successfully achieve tech independence? Can the US and its allies build a cohesive and attractive alternative to China's model? And most importantly, can the two powers manage their competition to avoid outright conflict? The world of 2026 is one of fragmentation and realignment. It's more complex and, in many ways, more uncertain. But it's also a world of new opportunities for countries, companies, and individuals who can adapt to this new reality. The US-China trade war has reshaped our world, and its effects will continue to ripple out for decades to come. Thanks so much for watching. This is a massive topic, and we've only scratched the surface. What do you think the biggest change has been? Let me know your thoughts in the comments below. And if you found this video helpful, be sure to hit that like button and subscribe for more deep dives into the forces shaping our world. See you in the next one!